Good morning, team. Happy weekend. This is the 10:15 members video. All right, so just I'm gonna try to make this as quick as possible. Cover, going over the markets really quick. Putting nothing to go over. We're in a huge downtrend. We've been vomiting since September, and like I mentioned, September was gonna be a really rough month, and it kind of turned out that way. And then we said we are gonna have a little rally into um, the beginning of the year. The beginning of the quarter, and we kind of had that. Yeah, we kind of had this little rally here, and then I said that it was probably gonna, stall out, and then fall back down to around mid October or so. So this is where we're at. So hopefully, let me get this a little bit further. There you go. Hopefully, we can have a little bit of a rally coming into the latter part of October, especially now that we have earnings season basically in full effect. The banks are already reporting and everything. Those are the ones that kick it off. So, we had a huge, turnaround yesterday, but we still, under this 21. This hasn't kind of budged. We had it here. That's why I told you guys to be short, 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 short. I made a lot of money here. Hopefully, you guys, went along for the ride. When we started reversing, I took some positions yesterday that we made some great money. KNSL, VMI, a whole bunch of other ones. I cover those. And then today, basically, we had another little rally, then just bombing it down. And maybe Friday we have a little bit of a down. Monday, another little down day, and then turn around Tuesday, back to these levels again, and hopefully we can get above the 21. We have to break this 371.88. This is kind of like a nice little level that we kind of hit our head a lot. And then that happens to coincide with the breaking the 21. And then we have this 378 number that needs to be the next one. And then we have all these levels up here. So I kind of stagger my levels to make sure that I see as we cross through them where are we at. The EMAs are stacked beautifully to the downside. So we're definitely in a huge strong momentum downtrend. So you can't fight that. You take little hits along the way as they're given to you. But this isn't a sustained thing where you can hold something for 3 weeks and make money on it. This is something you hold it for a day or two to make money on it, because you have 600-point moves in a day. It's insane. What else are we looking at here? Let me see that 3600 level I was mentioning, which is basically a 360. We did not hold it. We did not hold it. I wanted to go back over here. Let me clean this up. Get used to this little thing here. When you go back to a lower time frame, see we had this nice little rally here in the 30-minute. This is since Thursday, and then we peaked our head. We picked our head here, far below this 371 level, and then we just been downwards ever since. And then the EMAs are kind of spaghetti wires. We went sideways for a little bit with the spaghettiing. That's consolidation, and then we have a flush down. They're getting stacked up nicely, even on the lower time frame. And the squeeze right here. This is it's a one dot squeeze, so it's not really that prevalent, but still, momentum is firing to the downside. We have nice upward momentum. We have consolidation, and we're shooting down to the downside. We got sell signals everywhere. We're a little bit oversold, so that's a good sign. But here when we got the crossover of the EMAs, that's when we got us trending higher a little bit. When we got about the 21, even on a lower time frame. So always look for price to break that 21. If you notice here, it hit it a whole bunch of times, and then broke down, and then once it cleared it, boom, it took off. So keep that in mind. Clean this up. Let me go back to the daily. All right, so that's the market. Basically, just be safe, be conservative with your positions, and then be very quick to take profits. So I want to go over this. I'm not going to send you like a spreadsheet of a watch list, because there are a handful. I'm just going to type them into the email, and you're going to have them. guys, don't be trading around anything else. There's something else to be looking at. There's something that's working that's really hot. Everything I'm giving you guys is stuff that's working. So if I give it to you, have a good entry and a plan to get in above 21, take profits into strength, close to a 2 ATR, and then you know manage your position with stops along the way. So these are the ones that I'm looking at right now. I have positions in some of them, and then some of them are gonna be like B and C list ideas to have on the watch list once they're set up. But you have a good inventory of everything I'm going to give you here to kind of have for the week once they're set up on a good entry point. A good entry point is just so. Let me see. Let me turn this upside down. Okay, so look at this chart, right? This is a beautiful chart, right? You would definitely buy this, correct? So your entry will be anything below the 8. You don't want to buy above the 8 because above the 8 is already extended. Okay, you want to wait for that pullback to inside the 8 and the 21. That's your sweet spot. Okay, this is the sweet spot. So all your entries and any time frame you're looking at, your entry, the ideal entry has to be in this sweet spot, because this is the sweet spot where it's kind of consolidating, it's not already extended, and it's still not doing anything wrong. In other words, it's above the 21, it's coming down from an overextended period, so you're not buying it extended, okay? This is the sweet spot. Clean this up. Right here. That's what you want to buy, okay? And then once you're in here, then you just kind of write this out and you hold the 21. If it breaks the 21, that's your stop, okay? So you have a low risk entry, and then once it breaks that little boxy area above the 8, you write the 8. You just write it, and then when you get above a 2 ATR scenario, which is way up here, way extended, you start taking profits somewhere around here. I'm just giving you a hypothetical chart, okay? This is obviously not a real chart because it's the inverted SPY. This is like completely the opposite of the downturn. But I want to give you a picture perfect scenario where this is where you enter right here. See, this is where you enter right here when you're in that in between zone. You take off, okay? Let me see here. This is where you enter right here. Let's say you probably would have gotten stopped out here. You get back in here, you take some profits, and you start getting out. This is where you enter right here. You take off, you enter right here, and you ride the wave. You get extended, you take some profits, you enter again, you take some profits, and then here you enter again, and then you stop out immediately, and then you avoid this mess right here, and you put a little line in the sand here, right? This is a consolidation area right there, right? It's consolidating. Once it breaks that, boom, you get in right here, and you write this. You take profits into strength. You stop out right here. You wait for this to consolidate. You buy right here again, and that's how you just kind of ride this wave. It's very simple. So this will be the entry right here on this scenario. You will enter right here to write it. Now, obviously, this is now the opposite of what's actually happening in the SPY. It's just they inverted. So you would do the same thing here. What would you do here? You would shut the heck out of it. I got sell signals everywhere. I got a sell signal on the daily. I got a bearish stacked EMAs. So what would you do here if it gets to 371? I am shorting the heck out of this. In the 370 range, I am shorting, just like I was shorting up here, and we made really good money. So I'm shorting rallies, I'm buying reversals, I'm stopping out when I'm selling into strength on the way up. And unless we clear this 371, 372 area, I'm not going to be stopped. I'm not going to stop shorting the market because it's telling me that's what is happening here. Every time it hit his head, and you had a little wick, that wicked candle right there. That means that there's no strength. It's coming back down again on the 21. So it's a downward downward market. I'm digressing a lot here, but I want to get the point across. Don't think that we have a rally. It's like, hey, here we go, green light. No, no, no. Look at the perspective. Look where we're at. We're in a huge downtrend, and every time we hit the 21, we bump our head. Okay, so we don't want to go long until we're above the 21. Now, as stock pickers, we're selecting really, really good stocks, and then within those, some are working. You take quick profits because the overall market is just pounding the heck out of everything going on the downside. Okay, so real quick, I'm gonna go through the watch list. Okay, so these are the ones that I'm looking at. These first ones I have positions on. So I actually own some of these here. I bought it when it came in here, and I have another order to buy another 25 shares if it comes back inside. So I bought my initial position right here in the 169 range. So I'm a little bit profitable on this one. Again, nice momentum. It's still in a squeeze. I got a buy signal, little green arrows. I got buy signals everywhere here. So this is working out nicely. You know, it's a nice long trend. This would have been the last entry you would have gotten in somewhere in the 141 range. You take all this. Let's say you got stopped out here at 164. You wait for this to consolidate again. Let's say you buy here. You know, you might have gotten some profits and maybe gotten stopped out here, and then you buy here again, and then you write it. You get, you take some profits when it gets back down in here again. Then you wait for consolidation. You buy here. You get a little shakeout. You get stopped out. You avoid this. You come back inside. The EMAs are already stacked again. You buy here. You write this. Maybe you get stopped out here. And again, all these are profitable scenarios of writing it, taking the stop out, writing it. The only one that was a little bit of a loss was this one. But again, a very small loss to all these gains that you have here accumulated already. So again, the same thing here. You avoid all this. You buy here. You buy here again. You get stopped out. It comes back inside. You buy here, and then you have a nice trade here. You probably I would have gotten some on this 2 ATR move. I would have taken some profits. Came back inside. I'm adding to it again here. So I'm just waiting for this to continue. If it breaks the 21, like a 167, 160, actually the 166.81 is the 68.2. Sorry, 61.8 Fed retracement. So anything below this, like right here, if it breaks the 21, and let's say 160, 166, 50 around there, I'm probably gonna get stopped out. Because again, the stock's moves, the average true range of the stock in a daily move is about 7 points. So you don't want to have your stop at 3 points because you're gonna get stopped out and the stock really didn't do anything. So you always gotta look at the ATR of the stock, and your stop has to be a little bit more than the ATR, because an ATR move within the day is normal. The stock doesn't do anything, and then it stops you out. Now, if you're trading in a lower time frame, then you apply the same thing on a lower time frame. So on a half an hour, on a 30-minute chart, the ATR in this stock is two points. So if you're trading a 30-minute, then you might give it 2.5 points, 3 points on a 30-minute. But again, it's going to be a probably quick day trade for this because you're trading on a 30-minute time frame. Now on a 30-minute time frame, I wouldn't buy this stock because it's all wiggly. On a 30-minute time frame, I would have bought this pullback right here, somewhere around here. Let's say at 171. I would have taken it to, like, let's say I would have gotten stopped out here at 174, 175. So I would have picked up 3 points on a 2 ATR. So you win 1.5, almost 2 ATR. That's why you take profits on 2 ATR, and it comes back down inside again. Okay, I hope that makes sense to you guys. So I'm digressing, but watch list. LNG, somewhere in this sweet spot right here, okay? This is the sweet spot. This is where you're buying. You're buying in this range. This is your box. You're not buying here, you're not buying here, and you're not buying extending. That's your box. If you guys confine yourself to only buy between the 8 and the 21, I guarantee you're going to have so much like stress-free trading, because it's simple. If it breaks the 21, you get out. That's very black and white. And if it gets above it, the 8, you ride the trend, and then you get out if it breaks it back inside, and you take profit into strength at the 2 ATR. It's just that simple, guys. Very simple. This is your sweet spot. Just buy within this sweet spot right here between the 8 exponential, the 21 exponential. This is 34 exponential, 55 exponential, and 89 exponential. It's all fib levels. So you buy in the sweet spot. If it breaks out, you write the 8 and you get back out and you take profits into strength at the 2 ATR, and then the rest you let the 8 guide you. If you buy in here and within you buying it, it doesn't break above the 8, but it breaks below the 21, you get out. It's just that simple. Your risk is so little because you're buying right. There is no good price to buy or bad price to buy. It's only the right price to buy. The right price to buy is on an uptrending stock that is pulling in within the 21, coming out of it again. Okay, you want the EMAs to be stacked. You want momentum in your way. You want a rising momentum. You want a rising chart. You want it to be going from lower left to upper right, and then you buy at the right spot. This is a sweet spot right here, in my humble opinion. And all the greats that I've read and studied, that's kind of like how they make their money. Okay, clean this. I just want to get this point across. Okay, LNG, huge stock on as far as not huge. I'm sorry, like hot stock on your watch list. Cox, been trading around this like crazy the last week. I made really good money on this one. It's got a buy signal. It's been in a squeeze for a long time here. It's just been really going sideways, but in this little up moves to 2 ATRs right here. This little up moves to the 63, 64 range. You take profits. Boom, you take profits, and you buy back in the sweet spot. Boom, you take profits. So right now I'm in Cox. My stop is going to be like right here somewhere around 56, 38 around there. If it breaks this, and then I'm going to take it back to the mid 60s, low 60s. Okay, that's one in your watch list. CQP, same thing. I bought right here in the sweet spot. I bought right here. Where's my stop? See that line right there? That's my stop. If it breaks to 21, I get out. I'm taking some profits into strength. This is where this stock has been moving. This is kind of its range, right? So as long as it stays in this range, in this little box, it's not really doing anything wrong. Now, if it breaks this, I'm not taking this ride, but I'm kind of keeping it in perspective. So my initial entry was right here, right in this area. So I'm writing it up here to like 57, 58 to take the initial profit. If it breaks above here in the low high 59s, I'm taking some more profits here, and I'm raising my stop and so forth. So CQP, OPCH, another one. Bought it right here, the sweet spot. Okay, EMAs are stacked positively. It's a little bit choppy, but I'm buying it here. Where's my stop? Right here. I have the stop. I have 125 shares. Where's my stop? Right here. Very simple. I do what I say. I have a stop if it breaks below 21. It's just that simple. I have this line here. I'm taking profits if it gets to this level here a little bit, and then let me see. Let me do the fib extension here from the recent high to the recent low. So somewhere around here in the 37 range, 30, 36, 55 around there. I'm taking more profits, and then the rest, it might go up here, it might not. The market is really horrible, but I'm letting the 8 kind of guide me. Okay, so OPH, this is a sweet spot. Watch this if it comes back inside in the buy range. SGML. SGML is another one that I have. I bought right here. Why did I buy? Because I have alerts. And when alerts hit me, I go look at it. It's like, oh, it's in my sweet spot. I'm buying. Why am I buying? Because stacked EMAs, uptrending stock, momentum is going higher. Do I have a buy? I don't have a buy signal per se. I had it right here. I have buy signals here, and when it kind of came back inside, I lost a buy signal. But it's still within a nice little trend. So if you see this little trend right here, it goes boom, comes back inside. You buy here, take profits. You buy here, you might kind of stopped out. You buy here again, boom, take a very nice profit. Comes back inside. You buy here, let it ride. Holds to 34 beautifully. Holds to 34. Holds to 34. So now you know the trend of the stock. So now maybe you're 34, and it's not your stop because you've seen it before where it's not doing anything wrong. If it hits it a little bit and it bounces, it hits it and it bounces. So My stop is going to be like right here. I have alerts right here to get stopped out, and I have signals here. But basically, comes back inside, you buy, you ride. Comes back inside, you buy, you ride. Comes back inside. Now it's riding. So I'm in this process where I bought here about 28. I think it's like 28.40 around there, and then I'm basically riding it. My stop is right here. Let me look at the. This is the higher high. So let me see here. So this might get me. This might get. See how I kind of 31.59. It kind of comes close to it here. So like maybe 29.47. So at 31, I might take some profits at 31. Just because it's kind of getting a little bit extended here on a previous high. And then maybe if it breaks the 31.59 area, I might take some profits in the 32.50 area up here. But again, I'm gonna let the 8 be my guide and just ride this. So simple trading, very simple. Where did I buy? About right here. Okay, that's my sweet spot. Why did I know that? Because I had an alert. I had an alert that I put in, and then when I alerted, I looked at it. I looked at everything else. I went to a lower time frame. Say 30 minute. Okay, and I saw this kind of breaking out on a 30 minute. The EMA is kind of this reversing again. This momentum. See how it shifted? It's kind of reversing again. I'm getting green lights here. I'm getting a little turn on the momentum. So it's indicating me that this is turning a little bit on the positive side. Okay, so on a lower time frame. So that means that on my higher time frame, this right here was my 21.8 kind of scenario. And then once it starts breaking out, okay, now I could buy within that spot because I have momentum coming in from lower time frames. When I have lower time frame momentum, obviously for the daily to go up, the 15 minute, the 5, the 15, the 30 minute, the hourly, those have to be moving up. Obviously, because if you have a 5 and a 15 minute going down, the day's not going to go up, it's going to go down, obviously. But that's when you have the retracements to the sweet spot, and then you look for the bounce on a lower time frame. That's when you get in, and boom, you ride the daily higher. Okay, SGML, it's a good one. Now I don't have these. Okay, LNG, CALS, CQP, OPCH, SGML. I own these. I have positions on these right now. Okay, so that's my portfolio right now. Now these are the ones I took profits on that are still on my watch list. Put them on your I'm gonna try to go faster on these. Put them on your watch list, and then if they come in within the sweet spot, you go to a lower time frame. You see that lower time frame returning back to the upside. Boom, you get in on the daily, and your stop is at 21 on the daily. Okay, simple trading, guys. Okay, here, Orly, ORLY. I'm waiting for the see. I have my alert. Right here in the sweet spot. When this sucker comes back in here, that's why I bought it here. Boom, I made some money on it yesterday. On Thursday. When it comes back into the sweet spot, I'm a buyer. I'm definitely a buyer. I got a momentum going higher. I got green lights. I got a squeeze in. I'm buying right here. Okay. KNSL. Again, see, I have my alert right here. If this comes back inside, make some good money here, guys. Really good money here. When this comes back inside the 21, I'm a buyer. VMI. Same thing. VMI. I'm buying when it comes back in here. It's at 279 something here. It's kind of like it's kind of like right there, 271.81, which is right here. But I need this to go down a little bit more. I have some conflicting signals. Momentum is slowing, so I'm looking at a lower time frame, and this is kind of stacked to the downside beautifully, right? So this will be a short. If I'm just looking at this as in a vacuum, and I'm only looking at this right here to me, right? This right here, from this right here. This is a huge short, right? Because look at this, it's right in that 8 all the way down. So if that's going down, the daily's not going to be going up. So that's why I'm not buying, even though it's in my sweet spot. Okay, so this is good education right here. It's in my sweet spot right here, right? This is a great buy right here. But I want to go down to a daily, and I want to make sure that the daily is turning up. So momentum here is to the downside. The squeeze, the one dot squeeze is firing to the downside. Um, even if it wasn't a squeeze, I have momentum trending lower. I want this to start turning higher. I want this to go yellow so it can start turning to the upside. See how here you have all this momentum going down, and then right here when you hit that first signal, boom, you'd be a buyer here. Even if you bought it somewhere around here at 281, you took it to 288. It's still 7 points on a 30 minute. So momentum, and then momentum starts dying down. Now we're shooting to the downside. So until I probably see like a break above 280, 281, maybe 28, maybe somewhere around 280. So I'm gonna actually put an alert right here. I'm not buying until I get to this point because I know that this is going to start turning. This is going to start turning. And that 281, let's say 281.63, where's down the daily? 281.63, it's right here. It's in my sweet spot still. It's above the 38.2 retracement. I want this little resistance kind of like level to break out. See, I have resistance here. And then I want this to break out. I want this to break out. So once I get above here, then I'm comfortable, and then my stop will be somewhere here in 279 range. So I have a 2.5 point stop loss to a potential 7-8 point upside. Okay, that's how I would trade this. So I have an alert. When my alert hits, I look at it. I'm not sitting here watching charts all day. I am, but because I have alerts going off and I'm kind of looking at it. But it's basically what you do. You kind of put your alerts on your scenarios, so you have a plan in place and you execute. Okay, VMI, PLMR. I mean, good money on this one as well. It's extended. It's already extended, so my sweet spot's right here. See how I had the little box right here. You broke the box. You made some good money. You had a vomit. I bought some when it kind of started reversing again on lower time frame. I got out. We just had a one-day trade, just kind of make some good money. Didn't do anything after that because the market's been really shitty. So I'm waiting for my sweet spot. So right here, I got my alert, 88.62. I'm a buyer somewhere in the sub 90 range. Somewhere in the sub 90, I'm a buyer. If I go down to a lower time frame and it's setting up to the high side. Okay, these are kind of like second tier watch list, but still something to have and write down and put your alerts on because they could be potentially setting up or not. But this is the best of the best right now. WRFD. WRFD. Sorry, WFRD. WFRD. So right here, sweet spot. Okay. Let me kind of write this right there. So this is again, it's coming into the sweet spot. The market's not doing as good, so I have enough positions. That's why I'm not getting into this right now. But if I would look at this, kind of the same scenario, stacked beautifully to the downside on a 30-minute. Momentum is below zero line. This is definitely going lower. I got sell signals everywhere. Everything looks red. So I would not. Would you be buying this chart? I would not be buying this chart, right? So where do I want to get in? I want to get in maybe somewhere around here, right? Somewhere around there, because that means that this is kind of turning. This might be turning. It's breaking above these. It does have little lower highs here. I mean, higher lows. So I'm gonna do this to kind of alert me if it breaks this trend to completely just ignore it. But if this continues higher, higher low, higher low, higher low, it breaks above here. Let's say 32.93. What does that put me on 32.93? Puts me somewhere around here. I'm still in that sweet spot. You see? So it gives me confirmation that now I have support coming in from a lower time frame. I'm on the daily still on my sweet spot. My stop is right here at 32, 10 around there. So I still have a very low risk entry. And then my potential is like somewhere 34, 35. it's like 70 cents to 3 points. That's basically it right there. That's what you're looking at, you know. Um, the ATR is 1.7, so if it does, my 3 points is double ATR. There it is, double ATR, 3.4. So somewhere around here is double ATR. I'm taking profits. See how it works out, guys? Simple trading, very simple. Okay, AZPN. AZPN. Same concept. You buy in the sweet spot. I'm not gonna go through every single one in detail because it's gonna take a 3-hour video. But same thing. You go to a lower time frame. Okay, stack negatively, shooting downwards. I want this to kind of like at least here. Give me at least that for me to start looking at it on the daily, and then that will give me somewhere around here. I'm still in my sweet spot. So right now. I'm interested. I want a lower time frame to kind of like go up a little bit. Okay. I do have a buy signal on the daily, but the 30 minutes kind of like not looking as good. MPC. Same thing. I want this to go down a little bit lower. Again, just because of the market. Go to a lower time frame. Boom, everything's just breaking down. So I want maybe like here. Maybe 105. And momentum's going down. I want this to shift. Okay. I have a buy signal on the daily, but I have neutral on everything else. But I have a bearish stacked on the 30. So this 105 is still in the sweet spot. 105 is somewhere around here. It's just above it. So I might get in a little bit early. I don't want to get it too extended. This is a 4-point normal move on a stock, so I might want to get it somewhere around here, but somewhere in the 104, 70 something range. 104. I definitely want 104.61 to clear. I definitely want 104.61 to clear. So put it right there. Because I want this previous resistance to clear, and then I'm still buying it inside the 8. So I'll give myself a little bit of cushion. 102, 104. That's 2.5 points. Still within the ATR, so it might be tight. But again, you take it case by case. But it's something to look at because it might be going sideways for a while after this nice move, consolidated. It broke out right here. And then that's maybe going sideways for a little bit for them to make the next move. You see, APA is another one. Let me go a little faster on these. APA, again, I got my alert. Looking at it to buy in the sweet spot. I go to a lower time frame for confirmation. MRO, same thing. I'm going to put my alert right here. Somewhere for me to look at it in the sweet spot. Then I go to a lower time frame for confirmation for entry. AMN. I got my alert right here at 110. I'm buying it right here when I go to a lower time frame for confirmation. TTC. Got my alerts right here in the middle. When it comes back inside here, I go to my lower time frame for confirmation on entry point. To those, and then the last one, this one, DEN. Again, that one's pulling back nicely here, but I was looking at this, but it just, again, look at this. This is just nasty. I mean, this is nasty. Since Thursday, it's just been breaking down. So I want this to at least come back over here for me to take a look at it, start kind of pay attention to it, and then see how it acts in the 21 on the 30-minute. If it breaks above breaks above it, this 93.60 will be in play for me, and I will not be a buyer under 93.61. I'm going to wait for it to get above it because that tells me this momentum has shifted from going down to now the 8 is moving higher, everything is moving higher, and then this 93.61 kind of puts me somewhere back at the 8 here. But this 21 will be rising as well, so this 8 will be rising as well, so I'll still be in my sweet spot right here, but it gives me more probability that to make money because I have a rising tide behind me on a lower time frame. Right now, everything's just going down. I don't want to buy a stock that looks like this, right? You don't want to buy a stock that looks like, you don't want to buy this. Where's your bottom? Okay, this is the bottom. You make some money, boom, you bottom. Okay, this is the bottom. Okay, and now you went down. Okay, this is the bottom. You went lower. Is this the bottom? I have no idea. I have no idea, nor do I care. I want this to confirm that, okay, it has stopped going down. How do I know it has stopped going down? Because it has clear lower time frames EMAs. Okay? And then the other one that I have that I actually own, XLV. I own XLV on the short side. Why? Because it has come up 2 times to this area, this 55, and it has gone down. It has, look at this move. That's not sustainable, right? Not sustainable. Boom. Not sustainable. Boom. So I'm making money already because I sold it when it was up here somewhere. My stop is, so I sold it here and I'm short this. So where am I going to get out? I'm going to get out if it breaks above the 126 range. I have I think either 125 puts on this. So this is my only short. If it breaks above here, I'm gonna get out. I'm gonna lose maybe 70 or 80 bucks to potentially make a couple hundred, 300 bucks. So a great risk reward. Okay, that's kind of like how I'm playing this one. And then the other ones that I have that I put on XSP. XSP is like a mini SPX because I'm basically trading the market, but I'm trading the market on a SPY kind of level, the SPY. The reason why I don't do the SPY and I do the XSP is because the SPY is an ETF. Okay, it's an actual ETF. So ETF, I can get early assignment. On the index, on the SPX, you cannot get early assignment. In other words, if it goes inside my strike price at any time, I can get assigned that stock or that index on that ETF if it's American-based expiration. This is European-based, but in other words, I cannot get assigned until expiration. So I can get in trouble. Let's say I had the 360, and it's a 360 put, and it's a 358. So that means that I'm 2 points in the money. So at any point right now, I can get assigned if I was on the SPY. But since I'm on a mini SPX, I cannot get assigned, and I can just keep on rolling and rolling and rolling. I don't have the danger of being assigned the equity position. So that's why I trade this. And again, it's the index, so it's not gonna go to zero. So I am currently a 357 short here. I have a 357 short on this index, and these have week daily. These have basically day Monday through Thursday expiration. So I trade them from one day to the other, and just basically a little ATM of 300, 400, 500 points dollars in a day. Anywhere between $200 to $700 in a day. You can make on this based on trading strangles, iron condors, or just short verticals and long verticals. I don't have any long verticals because the market's been going lower. So all my long verticals, I took profits on it. So I made my couple hundred, 300 bucks on these in a day, and now I put on the short. So for a little bounce, I can make money on these. And if you keep going lower, I just keep on rolling them. For one more day, 1 point lower, 2 points lower, and so forth. That's kind of what the XSP is. The XSP is basically the SPX. It's the S&P 500. It's the spider. But I'm trading it at a spider level, not the full SPX of 35, 3600. Not this, because this requires a lot more margin. The SPI, which is the spider, SPY. Sorry, SPY. Here, it's the ETF, which is trading at this level. But I can get assigned this. I don't want that. So I go to the SPX, which is the mini S&P, and then I'm trading the S&P basically right here at 1/10 of the level, and then I could require a lot less margin, and I don't have assignment issues. And also, the SPX has a tax benefit. So in other words, obviously these are all either day trades or one or two trades in a day, 1 or 2 days holding the trade at the most 3 or 4 days. These are obviously short term, but when you trade the SPX, okay, which is this is the equivalent, the mini SPX, it has a tax advantage. In other words, 60% of my profits are taxed at a long-term capital rate, and only 40% are taxed at a short-term capital rate. So let's say you're at a 30% tax bracket, I'm only getting taxed 30% on 40% of my gains, and the other 60% are capped at a 20% tax bracket. So it has tax advantages to trade the SPX as well as the non-assignment rather than the SPY when I do these trades. Okay, that's why I have these. I might have given you more information than you need, but I want to lay it out so the foundation is already there. So going forward, when you hear me trading these, you have the foundation of what it is, how I'm doing with them, why I trade them, and all that kind of stuff. Okay. All right, guys. Sorry to have digressed a lot here, but I wanted to give you a lot of information to kind of like study this weekend, know what you're looking for. We can make a lot of money if we do things the right way, and be in the right side of the market and be in the right stocks at the right price.